If the handicapper gives 4 solid picks in a row and misses the 5th by a mile, what even has to happen? Maybe that horse broke a leg, or maybe the handicapper got the pick right, but that horse just jumped the fence and kept on running. You can do that, right? So, never a good time to make a video about gold price on the verge of a policy decision that's going to affect gold price. But here we are, working ahead of a possible price consolidation following a rate cut decision that we might normally expect to further pump up the rally. Now, why would that be? Well, assuming it is what we see, it's just a case of what had already been priced into the market. We've been expecting this rate cut all year effectively, so this wasn't a surprise. 100% of traders expected a cut this month according to the CME FedWatch. That's what we got. Now, traders were buying the rumor, now some are going to be selling the news. Presumably, at least. This is still playing out. The bigger story here, though, is still the trend, the actual rally, and how we got here this year before ever even getting this rate cut, or a clear signal for 2 more. And that wider rally is where the surprise has come in. And think back to last year, we were coming off a big year for gold with a 28% gain. Now, I gave a prediction that we'd probably see something similar in 2025, 28%, assuming no black swan type event. So $3,350. I did agree with most cases, though, for $3,500 price targets, but just like anyone giving those estimates, I thought any of them required specific catalysts. Well, gold passed $3,350. It passed $3,500. And just this week, it actually tapped $3,700. So $3,350 is a pretty big miss. I'm going to explain why, but first, let me give just a little bit of context here. That 3350 prediction, that was from 10 months ago, and I make these non-scientific guesses every December based on current trend and expected events. And for 4 years, they've been pretty accurate. Never off by more than a few percent because gold really doesn't move all that much. But as we've seen, this year is different. Now, before we take that further, quick shout out to channel sponsor Summit Metals. If you're looking to buy gold or silver, they have you covered. And hey, if you're looking to sell, they have you covered there too. They'll take care of you on both sides of the sale. SummitMetals.com. So just a little bit more on these predictions. It's going to be important in a minute. For my 2024 prediction, I cheated a little bit. I gave a $2,350 guess. That was for the end price, 2024. And then I came back later in December of 2023. I moved that range to between $2,550 and $2,650, depending on rate policy. Now, gold ended at $2,606 at the end of 2024, so dead center of that range. But for most of the year, it felt way off because gold took off early and it nearly hit $2,800 early before cooling off. Now, the real story in 2024 turned out to be central bank buying. That was something that wasn't very clear back in 2023. So all of this is to say that even though that price estimate turned out to be very accurate, the reasoning was a little bit off. Now, for 2025, my guess was a repeat of 2024, so 28%, meaning $3,350 by the end of 2025. And again, that assumed no black swan type event. Well, saying that out loud 10 months later seems pretty ridiculous because we blew past $3,350 already in June. Now, in my defense, I've been saying all year that I undershot that price estimate. I've actually been saying it so much that I think I've given the impression that my price expectations are always conservative. Well, that actually isn't the case. Last year was dead center of my $100 range. 2023, 2022, and 2021 were specific targets, and all of those landed within a few dollars. My 2020 end of year prediction for gold was almost exact. Same with silver. Now, like I said before, these are just guesses, so there's a fair amount of luck in play, but my guess for 2025 was significantly low. So what happened this time? Well, tariffs happened. The introduction of global tariffs and the ensuing chaos was nowhere on my radar. I'd say anyone who predicted today's prices before April, well, they probably just got lucky. They hit the bank board, it actually went in because there was no indication that we would see that kind of shock. It seems pretty obvious today, but in December of last year, that tariff policy, that wouldn't have even been a wild theory. Now, the point there isn't who got it right, who got it wrong. It's that everything changed in April, and all of our predictions need to be rethought. Well, now we're finally getting the rate cut, a 25 basis point cut, with 2 more signaled for the remainder of the year. And it's possible that we get a surprise out of all this, a surprise in the form of a pullback in price. Now, again, that would be because 25 basis points was already priced in. And to the extent that rate policy has been giving gold a boost, well, we've already bought that rumor. So we could easily see traders begin to sell the news. Now, this doesn't mean the run is over. If we get a consolidation phase in the short term, it just means traders are taking profits. Maybe we get a little bit of a price dip to get some buys in. Personally, I wouldn't mind that. I have a lunar horse to buy, but I would expect that we would very quickly find support again and continue on to that run above $4,000. If you look at the situation right now, you have big treasury holders like China selling down their positions, pushing the dollar lower, and now we have rate policy shifting. It's adding even more fuel. So you put it all together and it really is a perfect environment for gold to keep climbing. Not in a straight line every week. Again, I'm making this on the verge of a Fed decision, but the direction is clearly up, which means my initial price guess was way too conservative. So what does that mean for price targets if we want to update them? Well, we're already past that $3,350, obviously. It's been an outdated target since the moment that Trump introduced the tariffs. So how far up do we need to move them? Well, if we let the analysts do the analyzing, ANZ says $3,800 this year, $4,000 by next June. UBS says about the same, $3,800 the end of the year, $3,900 by mid-2026. And they have been consistently conservative. Last week, I mentioned Goldman Sachs analysts giving scenarios where gold hits $4,500 or even $5,000 next year. And some of those conditions to get there are already in place. Once gold starts pushing into new territory, it usually creates its own momentum. More retail investors come in. And if the falling treasury demand pushes more capital into gold and gold ETFs, well, that shift alone could take us through $4,000 and even into those higher levels faster than we might expect. Now, I don't want to fix an outdated conservative price target by swapping in an overly ambitious one, but if I was going to update my guess, well, I'd stick with what I said back in May when $33.50 was clearly no longer reasonable. I mentioned $37.50, even $38.50 being a better expectation. I'm going to stick with that. But if I was making a prediction today, it would just be that this rate cut decision might actually surprise some people because we haven't seen any kind of real consolidation all year. And I think we might be due. Now, the point in all of this is that we need to throw out past assumptions. We are squarely in the bull market now. This is it. Now, I don't say this to hype up some kind of moonshot. I say it because the price run actually makes sense given all the factors in play. That $3,700 we just hit, well, that was actually warranted. And $37.50 or $38.50, those are not moonshots. So whatever we thought gold was going to do this year when we were making those guesses back in December was wrong. And thinking the next move will be small or predictable is probably also wrong. The environment has changed, and that means it's time to make some new predictions. So let's get yours. Tell us where you think gold price goes the remainder of the year. What's our high and where do we end? Leave a comment to let us know what you think. And then while you're there, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.